If you want to quit your job, do you focus on cash flow? And normally, if I get a question and it's yes or no, or it can take a short answer, I'll just answer in text. This is a bit of a nuanced question with a nuanced answer. And I guess the real question is, if you want to quit your job, are you doing it because you want to retire or because you want to replace your job? That's the question I would start with. If you're looking to replace your job, cash flow is, retire or replace your job, cash flow is going to be important. And a lot of people look at real estate. And if you're on my channel, if this is your first time to my channel, that's how I did it. I invested for about a decade, retired in 2022. And while cash flow is a very important part of it, it's not actually what I focused on to be able to retire. If I just wanted cash flow, I could have quit my job years earlier and been a wholesaler or a flipper or a real estate agent. And I have a long list of reasons why I'm none of those. Those are basically jobs that you can use to replace your job with that do focus on cash flow. And the cash flow from those options could make your job optional and you could quit. But for me, I ended up choosing rentals, not just because flipping and being a real estate agent are jobs. There's other options too. You can invest in stocks or crypto or, start and grow a business. But I didn't make a lot of money. I had a bunch of bad debt I didn't know about until the divorce. And I didn't have decades for compound interest to do its thing. So I didn't have a lot to invest. I didn't have a lot of expenses I could eliminate. So I ended up choosing real estate as my way to make work optional and eventually quit my job. As the dock that I'm on seems to be breaking. I guess that's what happens when the boat goes by. I like to think of the real estate X factor, the XY axis of the more work you're willing to do, the more money you could potentially make. The more risk you're willing to take, the more money you could potentially make. So day traders have a lot of potential to make money. It's a lot of risk. People who run short-term Airbnb and self-manage it do a lot of work and could make a lot of money. I ended up choosing buy and hold rentals, the lazy way to do this. Buy a property, save a down payment, wait a couple of years, buy a property, wait a couple of years, rinse and repeat. But if I focused on just cash flow, I probably would have bought in a bad area to own rentals. That's where the numbers seem to make cash flow make the most sense. But I specifically targeted properties that help limit tenant turnover, right? And since I didn't consider math, I had to think about single family house versus small multifamily versus apartment complexes. In my area, single family houses don't cash flow, so I chose small multifamily, duplex, triplex, fourplex, or house with ADU. But I tried to keep it as close to a single family house as possible to help limit tenant turnover. This meant I wanted side-by-side units instead of up and down. I want pet-friendly fenced yards. I want washer-dryer hookups. I want, 2 bedrooms and a garage. More space means more stuff, less likely to move. The idea was if I could limit tenant turnover, my cash flow could make work optional so I could retire. And I do get a lot of people who say, if you run rentals, if you manage rentals, you are not retired. And for me, the 2 hours a month that it takes is a lot more attractive than the 50 to 60 hours a week that it took with my W-2. So I guess you'll have to decide what is retired for you and what is not. So was I focusing on cash flow? Yes. The way I look at it is we don't learn the math until we get it right? We practice the math until we can't get it wrong. The math is just one aspect of the investing strategy that you use to make work optional and to retire. And this is a short live on my phone where I will look at the comments afterwards. If you want your questions answered during a live stream, every Tuesday at 4 p.m. Pacific, I do live streams that last as long as the questions do. And I answer all of the questions, even the rude ones. In order to be able to replace my job and not have to go back, Not only did I focus on the things that would help limit tenant turnover, which made managing the properties easier, but I did things like I didn't want a huge portfolio. I figured the more rentals you have, the more tenants, toilets, and termites and problems you could have that you end up having to take care of. So I wanted the right amount of cash flow from the least amount of units. And that also included self-managing my rentals. Now, some people would say, well, you'd be a little more retired if you had a property manager. No, it would take me more than 2 hours a month to manage my property manager. So I'm very comfortable self-managing my 18 rental units that take about 2 hours a month. If I had a property manager, here's the math most people don't think of when they throw that in my face. If I had a property manager, the property manager would probably be making more money off my rentals than I do. Which would mean to get the right amount of cash flow from the least amount of units with a property manager, I'd have to have twice as many units, at least. Well, that's more tenants, toilets, and termites and problems to deal with. And yeah, you can have a property manager, but those problems end up coming to you even if they're handling them. Then I wanted to make sure I was diversified into an asset class that benefited from inflation and is ready for a recession. So I did a couple of things. One, I diversified my tenant types. Instead of just focusing on cash flow and thinking, okay, who's going to pay the most for the right rentals, I thought, if I have about 1/3 military tenants, 1/3 Section 8 tenants, 1/3 working or retired tenants, then a pandemic, a stock market crash, a prolonged government shutdown can't impact my entire portfolio. I also wanted my properties spread out, at least 10 miles apart, right? I don't want to own a 10-unit complex that pulls all of your tenants from the same area. I preferred to have 5 duplexes at least 10 miles apart so that if a base shuts down, if a port goes on strike, if anything that happens in one local area, it impacts maybe 1 or 2 of my properties. I also wanted them less than an hour apart so that I could still self-manage. So there was the factor of being spread out, different types of tenants, and close enough to self-manage. So while we look at the math, and that's what so many people focus on, yeah, we focus on cash flow. We make sure we, can't get it wrong. But think of your investing strategy, your goal in retirement. Is it to create a job? Is your goal to work but not have a boss? I've heard a lot of people say, I don't want to have a W-2. I'd rather be an entrepreneur because they don't want to work 40 hours a week and they don't want to have a boss. And I thought, well, as an entrepreneur, every customer is your boss, and you are now working 80 or 90 hours a week. That wasn't my goal. I prefer the 2 hours a month. It's slow. It's not sexy. It took at least a decade. And as you're looking at this, the last thing to think about is, are you ready for that inflation? Are you ready for that stock market crash? The main reason that I was able to confidently retire and walk away from a job that I liked, where I started making good money in the last couple of years, had $2 million in golden handcuffs, and still look back and go, I'm ready for inflation because I invested in assets. The people who own assets benefit from inflation. The asset values go up. Then I invested in Class C properties, right? I don't want high end. I don't want good school districts. I want the working class family or the working class tenants. Generally, I don't want to rent to kids. I do, so I don't discriminate. But I buy properties not in good school districts because I don't want to target families, because that adds to your tenant turnover. They age out of the school district. Also, the better school districts tend to be in the places that have the higher taxes, so it makes it, again, harder to cash flow. In a bad economy, when there's a stock market crash, if let's say there was inflation again, and it hit like 8 or 9% like it did in 2022, 2023, people will move from a Class B or Class A property to save money into my Class C rentals. There's increased demand. So I'm benefiting from inflation. I'm ready for a recession. I kept the amount of work that I have to do to a minimum so that I actually was retiring from my job and not just trading one job for another. So when you ask the question, if you want to quit your job, does that mean you focus on cash flow? The answer is yes, along with at least the 19 other things that make your strategy work or blow up in your face. Have a day full of awesome. I'm going to end this video with a very, what do you call it? not rude, inappropriate joke. So if you don't like inappropriate jokes, you should leave now. Don't hang out. This is something that I had to tell my kids recently because I'm a Gen X. And I gave you plenty of warning that if you don't like bad words, you shouldn't be listening. But I had to tell my kids the other day that every time I go to use words from my generation, like gay or retarded, for the things that we used to use them on, some gay retard tells me that it's offensive. Have a day full of awesome.